So the first thing I want you to learn now on this call is my inducement model. I want you to learn it. So it doesn't matter what you are trading, right? If you apply this, it's going to help increase your win rate. So for example, if you are trading the traditional SNR, which I really trade, because the reason is this: sometime before we get the confirmation is far way too long, and I don't want to be juggling around many pairs. So that's why. So I just found a system I could use to just check my bias quickly and look for potential area of entry. But assuming that we're using normal SNR level, I just want to give you an idea of what I mean. Okay, let's assume that this was a daily reject daily that we have there, right? Okay, that was this 4 hours. Yeah, let's just use 4 hours, but we would have used daily. Then we have our what? Our 1 hour breakout in this case. So assuming that was our breakout, then what time frame do we go for our inducement?
30 minutes or 15 minutes?
Yes. So we'll go to 30 minutes for inducement. So our breakout is here. So obviously, where's our inducement? Normally, this can be our inducement, but with this that I'm introducing to you, if you use this as your inducement, it's going to increase your win rate. How? You need to look for the one that you need to look for a fair value gap that have been traded into. For example, that's one, and of course, this is another one. This is a fair value gap, right? That was traded into, right? And you just need a V shape or A shape inside it. That's all. Even if it did not break structure, but if it breaks structure, is better and stronger, right? So this also is an inducement. So you can now look for your entry. So we'll go back to what our breakout time frame for entry. Is it not? We'll go back to our entry time frame for entry. So in this case, for this inducement, we're definitely going to use either this or this, all right? And of course, that's where you can now apply the other confirmations like double confirmation, candle confirmation, then probably normal SMC breakout there. Then of course, if I'm using this, then this is where I'm going to use 50%, just 50%, the measurement here. So for example, on this, how do I know the candle to measure? This is it. After that, okay, this one now, I'm still seeing it that is on 1 hour. So what do? I must go to 4 hours, right? Remember, inducement was 30 minutes, right? But when I came to 1 hour, you can still see that fair value gap. So what I will do, I will go to one time frame higher and I will use that one. Do you understand? So in this case, this obviously could be it like this. I will use this like this. Do you understand? Then use the 50% of that. So that would be, somewhere here, right? So that's that one. So the same logic here too. So okay, you want to look for your entry in any of these zone. Remember, it's 1 hour zone, 4 hour zone, right? For not 1 hour, 4 hour. But this was 1 hour inducement. So you can potentially do what? Go to 4 hours to look for your entry. But based on the Komepips MSNR model, how we trade it, we are going to look for our key level on 1 hour. Why? Can somebody tell me the reason?
Because that's the 2x time frame. Because that's the 2x time frame.
Okay, what is the 2x time frame?
That's the breakout time frame.
Exactly.
Yes, breakouts.
Yeah, thank you so much. Exactly. So yeah, so after this now, what we have this as a key level, we have this, MSNR, you don't actually know the one that price we use. The only thing that gives you a clue that okay, this is the one price we use is inducement. So in this case, this is the one we have what clue about. But funny enough, do you know all of this zone? Everything here belongs to this key level, right? But of course, we're not going to use all of these big stop losses. No, we will not. So what do you do? This is where maybe double confirmation come in, right? So let me show you double confirmation. So I can use the same time frame, my entry time frame, all right? So this is a key level, for example. Do we have a double confirmation? How many of you know what double confirmation is not? How many of you know what it is not?
So this is the first time I'm actually hearing of double confirmation.
Yeah, I've actually heard
No,
of this
I don't know,
concept.
sir. I don't know.
Well, I just thought like double confirmation meant double confluence.
Or double bottom also.
You guys need to make this money fast. Very important.
I'm telling you.
Very, see, you need to now. Let me say this now. If you show me that you can trade very well, I can buy a prop firm for you to trade. If you prove to me that you can trade very well. So this is where, so I'm encouraging you now to go and study more. Then of course you have to show me proof. And now by posting on the mentorship group, you don't have to send it to my DM. I'm seeing everything happening there. You understand? And so now, another thing I want to say, you can ask this my student Clement any question as well. All right, you can ask him any question, and of course, he has a unique way of looking at the chart too. Yes, he got it from one of the studies that I made with him for hours. So that's why I'm sharing all of this with you so that you'll be pick. You don't have to trade everything. Me, I don't trade everything when I come to the chart. No, right? I don't trade everything. Don't think I trade everything. I can't even remember when I mark daily reject, daily for a breakout. It's been a while, right? But I know what I'm doing. Do you understand? So that's why I'm showing us everything here so that you can also pick when you are studying. Look for patterns and repeat. That's how it works. So what for it to be easier for you, just follow what I'm showing you now, then study it, amplify on it. That's how you get into it. So this is what double confirmation is. So we have this as our key level. This is our key level. And we want to buy. Okay. This is a support level we want to buy. Now, the time frame that we want to buy, price the candle comes and does this and creates a rejection like this. Now, not just any rejection, take note, not just any rejection. This rejection must be a bearish rejection if we are buying. If we are selling, it must be a bullish rejection. So once you see this bearish rejection, this is your confirmation. And this is what is called a double confirmation. So where do you enter? Now, usually for gold, price will likely come back to that same key level. So you enter from that same key level. Your stop loss below this week. Now, some other pairs, price will come and take out this whole. So for other pairs, most times, it's not guaranteed that price will use come here, or come here. So what you can do is maybe for now, if you are still learning it, you can just use immediately that close you use there, you place it here, because, or maybe even give it some space here, because you don't know if it will come. But if you're aggressive like me, you don't need to play all of those. You can just if you're aggressive and patient, you can just say, okay, I want to price or get here and my stop loss no matter what happen. Or you can say, oh, I want to enter here and let my stop loss be here no matter what happen. Understand? Or you might say, oh, I want to be patient, I'm willing to miss the trade. You have to lose something to get something. I'm willing to lose the trade, or not lose, miss the trade. So you can just place it at the end of that, because some candles, like I said, will come and take out this and still continue up. But this is what we call the double confirmation. Now let me show you on this chart, for example. So remember that, did you even wonder why I had to draw all the key levels? Because I know in MSNR, you don't know the exact one price we use. In fact, any strategy, you almost don't know the one price we use. But it's just that you have a hint of the one price might likely use. So for example, this is our highest probability, not highest probability anyway, but one of the highest probability. Then this last one is the highest probability. If this one fail, then it means the whole zone might likely fail. Do you understand? But doesn't mean you will not mark the ones that all your key levels around that. So you mark that, mark that, mark that, mark that. So what you can now do is your confirmation. So can you see it? Can you see it here? What I just showed you? That's double confirmation. Price tap it with what? Remember, we are buying. It must be what? A bearish candle. So you see that rejection. So what do? I gave us different scenarios. You can see, thank God, all the examples are even here. You can choose immediately that closes. You can just enter there, because sometimes price will not still come back to this week again. You put your stop loss there, So if you do this, and you definitely close, you would have closed, maybe you would have gotten like 1 to 4, if that's okay for you, right? 1 to 4. Then price even more than 1 to 4, like 1 to 5, right? Then if you were waiting and say, no, I want to wait for the 50% of this So what do? You can say this, then that's the entry there. Can you see it? So that's the double confirmation. It's just one candle, but you must use it on the right time frame. If not, you get wrong. Then if you enter on this one, see this example, for example, you see it now, it will give you up to 1 to 10. But you see, sometimes it will not come here. You just use this one and go. So this is where your study comes in. Okay, which one am I more comfortable with? That's one. Then this is another one, the other one. You see, price came back to where? The key level. Look at that. Price came back to that same key level and finally moved. Can you see it? You will find it many places. You'll find it everywhere. If price really want to go to your direction, it might likely give you that confirmation. Let me give you a bearish example. So for example, this no confirmation. Oh, okay, see this one now. See, this is a key level, right? But what candle rejected? A bearish candle. We are not going to sell. Why? Because we want to sell. So what do we want? A bullish candle rejection from our key level. Do you understand? And so that's it. Okay, see this one now. Where is the key level? This is the key level. So what kind of rejection I want to sell? What kind of rejection are we looking for? A bullish rejection. So immediately that happens, you can enter or wait for price to get what? Yeah. But you see, in this case, price never came back. You see why you will need to study it and understand the one that works for you. Then at most, if 1 hour is your entry time frame, at most for early entry, at most, but sometimes can give you a fake signal, but for early entry, at most you go to one time frame lower. In this case, for 1 hour is 30 minutes, for 4 hours is 1 hour, like this. So for 30 minutes, do we actually have it? Now for 30 minutes, I wouldn't say we have it. If this form on 30 minutes we don't have it, then when this close, of course this two candle comprises of 1 hour, then you go to 1 hour, for example, maybe you would have seen it on 1 hour, right? So that's double confirmation. Is it clear?
Yes, sir.
So
No,
sorry,
I
missed
think I grasped more. Actually, I think I grasped what you're saying, but
It's not
sorry,
difficult.
I just have to ask one last question. Sorry.
Okay.
Sorry. In the first explanation, when price taps the key level,
Yes.
and that open close key level and give us a bullish confirmation by closing with a bearish candle body, right? So how did you get to draw that box to the 50% level?
Okay.
Okay.
Now it doesn't
Yeah.
have to be open close, or like it has to be any of your key level based on your analysis. Now it's simple. Now it's normal. It's box. Are you new to trading? It's normal box. See it there. See the setting. But this one is
No,
gamma
I
box.
know. I get you. What I'm asking is, what's the logic behind it? Is it that price will come
Okay.
back to?
Yes,
Yeah.
that's what I just explained to us now. I said you can wait for price to come to the key level, or you use 50% of that candle,
week.
yes, of the week. And like in this case, see it here, it came. But sometimes it will not come here. Sometimes you just use this one and go. Then so I just said you can decide to use any of the three, or you just say, okay, I don't have that energy to between that. Let me just enter from there. You understand? But it's just that it might reduce your risk to reward and maybe give you some tough time of drawdown. Yes. So every advantage have disadvantage. So sometimes you just push, you won't even come back, you won't look back. So that's just what it means. So for example, now this prevented you from taking a loss here unnecessarily. For example, because you didn't see it, you will not enter. So you will now be waiting for what? The next key level. So you ask yourself the question, did you see it? Yes, you saw it. Then you can now enter on that. So that's on that particular one. Is it clear?
Yeah.
Then that's for. So I want to believe you already understand double confirmation. Now there's what we call candle confirmation. Now we will not even go about into that one because it might be complex to you. But funny enough, I already have the video on that drive, but not on the one that you have access to, maybe some of you, because the reason is deliberate. I want you to focus on just get it simple. All right, see example of double confirmation, and we call it candle, not double confirmation, candle confirmation and equilibrium. And there's decisional level, bro. There are many, but you don't need all of them, sincerely speaking. So now I've taught us two things now. Can you tell me the two things that you have picked so far?
Double confirmation for me, and
inducement.
Yes, the inducement with the fair value gap.
Exactly. Yes. The more you stick to that one, the better. Like it works. In fact, sometimes I am not saying you should go and do it. So funny enough, last week I just did it blindly, like not blindly, sha, but without putting much effort on those zones. But it doesn't mean it to work 100%. Now, if your fair value gap inducement is on 4 hours, your entry should be on daily. You understand? Like it has to be in a time frame higher. You understand? So let me show some. Okay, this one for is I think this trade is this a perfect example? No, not this one. See it here. It's the same logic. It's the same logic here. I know my chart is kind of rough in your eyes, and that's because sometimes I just want it to be like this because I'm still studying. So
You can use Pepperstone. It's the same as Saxo.
don't worry. Let's use this one.
Okay.
They are not the same.
Okay.
They are not the same. Okay. So for example, you see now. Okay, now you understand why I used to draw. See now, see all the areas I use for inducement. Can you see it? They have fair value gap. They have fair value gap. Right? See it now. This one has fair value gap. And immediately price took it. What happened? It moved. So if I want to, what do I do? And enter. Maybe assuming I already have a reason to enter there. But even though I don't, let me show you this one. So I will go to one time frame higher, seeing that this is 1 hour, right? So I will go to 4 hours and look for my entry there. It's quite simple, sha. If you are not greedy with it, I think it's cool. You see it now. So what do? I can now use this week to enter. But in this case, it didn't come. It didn't get here, and price push. Of course, by the time price gets here, I would have gotten other price action formation. So of course, I wouldn't be interested in that area again. You see it now. So that's exactly that's one way to use it. But if you use it with what you already know, it will help you big time. Right. I think that will be it for now.